Happy Friday, everyone. Thanks for joining us on this edition of Business Daily. I'm Lee Ji-eun in Seoul. Before we get started, let's first get a quick check of today's highlights. Britain votes to leave. In the historic referendum, the people of Britain have voted to exit the European Union. We look at how this massive shakeup will affect the UK, Europe, and the world as a whole. And we're seeing huge volatility in Korean markets following Britain's decision to exit. Local shares have plunged while financial authorities hold an emergency meeting to discuss the possible fallout. We have these stories and more coming right up. The people have voted and the results are in. With all votes counted, the United Kingdom has chosen to leave the European Union. And our Eunice Kim joins me now for a look at the biggest story of the day. So Eunice, it's been a roller coaster ride for 12 hours or so for the markets as well. And we'll get into that in just a bit. But let's first go over the results first.
Well, it was definitely a nail-biting vote count process, wasn't it, Ji-yoon? Not many people likely got good sleep in the UK Thursday night. Let's go ahead and get a closer look at the tally then. Important to note here is that this is a ballot-by-ballot referendum, not region-by-region. Now, with the tally remaining close throughout the night local time, the victory ultimately did go to the Leave camp, with 51.9% of voters siding with them. The margin was tight. 3.8 percentage points. Now, turnout, the UK Electoral Commission said, was very high at 72.2% of registered voters. And one of the interesting things about this once-in-a-lifetime referendum is that it was the younger voters that wanted to stay in the EU, while those elder in age wanted to leave. Now, Britain is en route to a lengthy process of leaving the European Union, the first country in the regional bloc to do so. And the process is expected to take at least a couple of years, according to experts.
Now, this came as a huge surprise to investors, and the sterling really took a beating.
Yeah, you're absolutely right. Disbelief and stunned are a couple of words used to describe investors and the financial sector. In general, markets and bookies had shown great confidence in the UK staying in, even as Britain's headed to the polls on Thursday. Now, on Thursday, the sterling had actually hit its highest point of the year against the US dollar, but that changed drastically as the early vote counts showed the Leave camp doing much better than expected. Here's how the British pound swung throughout the day today, tumbling to the lowest point since 1985, 31 years. Volatility not seen since the 2008 financial crisis. Investors instead poured over to safe haven assets such as the yen, gold, as well as U.S. treasuries.
So how are central banks reacting to this news?
Sure, we've already heard from the Bank of England, and it is saying that it's monitoring developments very closely and said it stands ready to take all necessary steps, including providing emergency cash support in the case that it becomes necessary. Earlier this week, ECB President Mario Draghi said he was also keeping a close eye on the Brexit vote.
That we are trying to be ready to cope with all possible contingencies. At this point, it would be very, very difficult to be more precise than that. I think we've done all the preparation that's necessary now.
And I should also add that Bank of Japan Governor Haruhiko Kuroda said last week central bankers around the world have been in close communication with each other ahead of this momentous vote.
Now, on the more micro level, what happens to London then?
Yeah, so we're already hearing from credit rating agency S&P that the UK stands to lose its AAA rating. We will be watching that very closely. And London, of course, is the financial heart of Europe. Even though it doesn't use the euro as its currency, it is the world's principal site for euro-dominated trading, a $2 trillion a day market. That could sure change with this latest development. It's also home to the world's largest cluster of foreign banks, providing the most financial services around the world. And ahead of this groundbreaking Brexit vote, companies and banks had hinted that a UK without exclusive EU access would have less appeal for them. HSBC has said it could move 1,000 investment banking jobs from London to Paris, and the likes of JP Morgan and Citi have issued similar warnings. Germany's Frankfurt is reportedly having received a number of inquiries in recent months as well.
Now, we can't not talk about politics here, as this is a very much political decision. What changes can we see in the UK and the European Union at large?
Right. So this is the Great Divorce. 43 years since the UK joined the EU, and it is now en route to begin filing papers to leave it. And the UK is not likely to be received kindly either, if anything, to set a strict precedence for other countries considering that their own Brexit referendums. In fact, France's Front National Party has already called for a referendum of its own. Now, this as major elections are coming up next year in France, as well as Germany and the Netherlands. As for the UK, one day before Thursday's vote, European Commission President Jean-Claude Juncker had ruled out any renegotiations, saying EU's last deal with Prime Minister Cameron back in February was the maximum he could receive, finally adding, out is out.
Sure, and the UK's head of state is expected to, officially report to the EU the Brexit decision, but will that be Prime Minister Cameron?
Right, and some had said that he could be losing his post after this referendum. And given how close this Brexit vote tally was, a 3.8% difference. Whoever does take the reins here on out is going to have a big task ahead of him or her to get the country to reunite while balancing years of tough negotiations with the EU. Having said that, Prime Minister David Cameron did receive a letter earlier today ahead of the vote tallies from 86 MPs, including 5 of his own cabinet ministers who had opposed him in this campaign. Get this, the letter also included the signature of very vocal opponent Boris Johnson, the former London mayor, saying, expressing and basically full support for Cameron to remain as Prime Minister of the UK, saying in part, thank you for giving the British people a choice of their destiny. You have both a mandate and a duty to continue leading the nation and implementing our 2015 manifesto.
And with that, a great period of uncertainty begins, I guess.
That's right. It's just beginning now.
Thank you so much for coming in today, Eunice.
You bet.
And of course, on this news, we've seen a roller coaster reaction from world markets, and Korea is, of course, no exception. We go live to our Hwang Jae at Korea Exchange for more on the market reaction. So, Jihae, markets had priced in a British remain, but of course, we've seen a complete reversal, putting strains on local shares today.
Right, June. It was a frightening day for many investors here in Korea and, of course, outside of Korea. The benchmark Kospi actually opened above the 2,000 level today on the back of hopes that Britain will decide to remain or stay within the 28-nation regional bloc. But the final results actually showed the direct opposite and sent the index plunging to 1,925, closing down around 3%. The same goes for the country's tech-heavy Kosdaq. The index erased all of its earlier gains and shed a whopping 4.7% today. After poll results started to put the Leave campaign in a stronger lead, its shares plunged, triggering a sidecar. We've seen 2 sidecars kick in so far this year, including today's. The system acts like a circuit breaker that suspends transactions for 5 minutes when shares rise or drop by 3% or futures by 6% or more for over a minute. The tech-heavy index saw both slide beyond the 6% mark, triggering the temporary halt. The Korean won, of course, also weakened significantly against the greenback and traded at 1,179 won. That is nearly 30 won up from the previous close.
Now, what about other markets around the world?
Well, not surprising at all. Asia saw some massive plunges. Japan's Nikkei actually closed down nearly 8%, and its futures once shed over 8%, and of course putting a circuit breaker in motion. Hong Kong stocks plunged as well, with Hang Seng headed for its biggest loss since August in the early afternoon. This all comes as investors are now seeking for a safer investment outlet, with the Brexit actually taking place. And as you said, markets haven't been pricing in that uncertainty, so the trend has been further amplified throughout world markets. The British sterling once plunged to a more than 30-year low against the US dollar, as you heard earlier, down nearly 10%. The Japanese yen, which is traditionally considered as a safe haven, surged to its strongest level since 2013, once trading below 100 yen against the greenback. This prompted Bank of Japan BOJ Governor Haruhiko Kuroda to say he's open to provide sufficient liquidity, including swap lines, among 6 central banks. Gold, another safe asset, is also rally, jumping around 8%, hitting $1,355 an ounce around noon, the highest price since 2014 in Asian trade. This was Hwang Jie reporting live from Korea Exchange.
And to tell us more about how today's decision in Britain is going to affect the Korean economy, Professor Shin Sang-hyuk of Kyunghee University joins us on the phone today. Thanks for joining us today.
Yeah, thank you. Hello.
So how is the Korean government reacting to this latest news coming out of Britain?
Well, in fact, the Korean government preparing for this situation for a while. So at the moment, the Korean government makes its every effort to stabilize the Korean market. And for this one, the Korean government very closely monitors the currency market and foreign capital outflows in order to reduce the volatility in the Korean market. And on the top of this one, in fact, the Korean government tried to strengthen the policy coordination with the Korean ministries in order to prevent the impact spreading to the real economy. And so I think at the moment the Korean government just tried to just wait and see the market situations in order to take the right options to stabilize the Korean market.
Then how should the Korean government address the risks of massive capital outflows and foreign exchange reserves?
Yes, for the stabilization of the foreign exchange market, actually, as you know very well, Korea has acquired a huge amount of foreign reserves. So by using this, the foreign reserves, the Korean government maybe just try to decide when they implement so-called smoothing operations, which is the measures to stabilize the Korean foreign exchange market. And for the reduced volatility in the foreign exchange market, definitely, as I already explained before, the Korean government is very tightly monitor the foreign currencies flows. Well, as we worry about the huge amount the foreign reserve outflows can be happen. So the Korean government is tightly monitoring it, and then if needed, they can just try to use many ways, such as a circuit break or something like that. I mean, this kind of measures, as far as I know, that the Korean government has prepared, and then the remaining point is the when and they decide to use those kind of measures, reflecting the changes in the local market.
Then how would Brexit affect Korea's trade with Britain as well as the European Union as a whole?
In fact, when we look at the ratio of the Korean exports to the UK, it's not that much big. As of the end of 2015, the total the Korean exports to the UK was roughly $7.3 billion, which was equivalent to only 1.4% of the Korean total exports. And then the UK's the investment into Korea was only $260 million, which was equivalent to only 1.2% out of total foreign the investment into Korea. So when you look at the volume, I mean investment volume and the trade volume with the UK, we can say that the negative impact which Korean economy will have from the UK's leave from the European Union. But the one thing which is really worry about it is that, you know, maybe about 2 more years will be needed to see the leave of the UK from the European Union. So we can say that during these 2 years that the Korean economy can take advantages of the benefits of Korea UFTA. But after 2 years, depending on the status of the UK in the relationship with the European Union, we can have some negative impact in the trade with the UK and in the trade with the European Union itself. As you know very well, EU is one of the largest 3 international economies in the world. Definitely, EU is certainly one of the most important trading partners for Korea. So definitely, it can be one of the potential threats. And one thing more which I want to underline is that, because of the Brexit, maybe the many countries which have the trade with the European Union will be affected negatively. Then in the trade with those countries, Korean government, Korean economy will have some negative influences in its trade. So as a whole, definitely there will be some negative impact on the Korean economy, but on the short-term basis, not very much. But we have to prepare for such a kind of the situations for the future, the Korean economy, I think.
Well, much to keep our eyes on. Thank you so much for your time today, Professor.
Thank you.
And that wraps it up for today and this week. Thanks so much for watching, and we'll be back next week with more at the same time, same place for your Business Daily. Until then, goodbye.